most of you probably know me from swipe trades. I was one of the most accurate and precise traders in swipe trades. And through the trials and tribulations, now we have our own app, and this is actually the first time we're ever going to be live streaming. So with that being said, I'm super excited to be here with you guys. I'm excited for the value that we're about to all go over, and not only that, but just go over some charts and help you guys make some money. So that being said, once again, I appreciate y'all being here. I see you guys dropping your areas: Barbados, Indiana, we got Trinidad, we got the UK. Super lit, right? So when it comes down to it, guys, this is the steady session, right? Now, steady is actually a new product here at I Am Mastery Academy. Now, when it comes down to steady, what I want you guys to understand when it comes down to steady is, steady is something that's going to be very simple, and it's going to be able to help you guys make a lot of money. RTL, Refuse to Lose, North Carolina, London. What's going on, guys? Rubans, what's up, baby? Now, when it comes down to it, guys, we're going to be going over not only how you guys can properly use steady today, but I'm also going to be breaking down some setups. Brooklyn, Manchester, we outside. What's good, guys? Now, when it comes down to actually getting connected in with steady and how it's really going to work, the first step you guys got to really do is just click on products, and then from products, it's going to take you to all of our products and services. Now, once again, guys, I have access to everything. I have the elite pack, but when it comes down to it, steady is actually free for the next 30 days or so, right? So if we click on steady, boom. What I want you guys to understand about steady is from here, all you got to do is click on steady, and it's going to actually take you right into the app. Now, I'm going to break down how this works, how you guys can make money with this, and how you guys can profit each and every single week with these swing trade ideas, right? And I'll actually break down why we took specific setups, how we found these precise entries, and how you guys can actually make money with these trades. So this is how steady really works. You're going to get an analysis. You're going to get the chart. So the same way we see our charts is the same way you guys are going to see our charts. You guys are going to get access to the chart. And on the chart, the way it's going to work is there's going to be an arrow telling you where to buy, where to sell. We'll label out the key points, right, such as your entry, your stop, and your targets, right? Now, when it comes down to it, all you have to do is come up here and subscribe to the Telegram so you guys can receive the alerts when the alerts are coming in, right? Subscribe to the Telegram so you can get the alerts when steady has new trades. And best of all, how it's going to work is very simple. Most of these trades are going to be pending orders, so you can come in here and set up a sell limit or a buy limit depending on what the market's going to do. So on this specific market, we anticipate a price coming right up to this blue line and then going down from here. This trade's already hit our take profit 1 for about 35 pips. Now, what I want you guys to understand is steady is a swing trading tool. Myself and John Dollery are swing traders. We're always going to be taking swing positions. But we know that not everybody's a swing trader, so the reason why we have 1, 2, 3 take profits is just so the people that want to come in quick and get something off the table, they can get it off at TP1 or 2. And then the people that are long-term traders, the people that are actually going to really take the trades for the distance are going to go for the TP3s. Right? Now, the cool thing about this is not only are you guys going to get the analysis of what we're looking at in the market, but we're also going to give you guys notes down here, right? So there'll be notes as well. Let me check the session real quick. Super excited. Finally go live. Yes, Detroit, Trade House, baby. What's good, guys? Can you show the Telegram one more time, please? We'll also be using Pip Talk. 100% we'll be using Pip Talk once we get it up and running. But let me just keep breaking down steady to you guys. If you guys want the Pip Talk, just come up here, top right corner, you can get the Pip Talk. Now, not only are we going to be giving you guys pretty much expert analysis on what we think the market's going to be doing, our biases, but we're also going to be giving you guys education on what we really see. So down here, I actually broke down a nice little, article on why I thought GBPUSD was going to come into this price point and then drop from there. But sometimes the market doesn't necessarily do what we want it to do, right? Price came here and dropped. What I want you guys to understand, even though it might not get to the perfect pinpoint entry, the analysis and the understanding of what's happening on the charts, what's happening with the candlesticks, is the key thing from here. Just because a trade doesn't get to the entry zone or exactly where we want it to go doesn't mean that it's a bad trade or we should try to miss it. There's always another way to get into these positions, right? Even though this trade didn't get exactly to our entry point, this is a trade that did dang near 230 points of profit, right? Smashed right through our target 2 area, almost down to our target 3. What I want you guys to understand is in the notes of this trade, I wrote that we're looking for a long-term, we're looking for pullbacks in the market so that the market could go higher, right? So I'm actually going to be breaking down GBPUSD and what's to come, right? But guys, we sold USD CAD here. We're currently floating, I think 50 plus pips on that one. This was just a test. This Euro USD was simply a test. GBPUSD, it missed our entry, still a great setup. Gold, same thing. Gold missed our entry by just a little bit, but once again, the bias was amazing, right? That trade went for dang near 400 plus pips. So, we're giving you guys information. We're giving you guys the notes. We're giving you guys a rough understanding of what we're seeing. Euro odd, this was a very quick one. Entry was here. It shot up, TP1, stops to break even. This trade's no longer, it's no longer active, but USDCHF, USD CAD, and are the only current active trades at the moment. Now, when it comes down to it, I want to go ahead and get onto the actual charts and kind of break down these setups for you and why we believe USDCHF is going lower and why I have a strong belief that GBPUSD will come a little bit lower before it swings up to new highs, right? So before we even get into the charts, what I really want you guys to understand is structure, right? So if you guys are taking notes, what I want you to do is just take notes, think with me, structure. To really be a successful trader, what I want you guys to understand is you really have to be able to take advantage of structure, right? If you guys can't hear, I don't know what the issue might be. There's some of you are saying you can't hear. My OBS is showing that it's loud and clear. So sorry about that, guys. Now, when it comes down to structure, really what I want you guys to focus in on is simply this. Understanding the trend, right? So figure out what type of trend you are and really understand the trend, right? Now, this is some things that are very beginner level, but these are things that people fail to thoroughly understand, and that's why they never become successful traders, right? Now, when it comes down to it, all you got to really understand when it comes down to trading is understanding structure and understanding the trend. So I'm going to draw out an example of a trend. All right, so there's an example of an uptrend. Here's an example of a downtrend, right? There's honestly only 2 trends. There's 3. There's the uptrend, the downtrend, and then there's the sideways market, but we don't focus on trading sideways markets, right? Sideways markets are traps. So when it comes down to it, what I want you guys to understand is obviously when it comes down to an uptrend, we have things like higher highs and higher lows, right? So I'm just going to abbreviate this to higher low. So higher lows. Higher lows. Higher lows. And then we also have points called higher highs. Higher highs. And this might seem basic, but give me a second. I'm gonna really turn up, so just be patient, guys. Boom. Boom. Right? Same thing in the downtrend. We got lower lows and lower highs. What I want you guys to understand is the key thing in establishing yourself as a swing trader is understanding where price is in within the structure of whatever trend you're trading, right? When we're trading, we only want to be in positions to be able to catch these impulsive moves, right? You know, in a trend, we have impulsive waves, and then we also have pullbacks, right? So these shorter legs are the pullbacks, right? Now, what I want you guys to really understand is when you're trading, you don't want to be caught up in sideways markets. You don't want to be caught up in anything. You want to have the most precise entries to buy the market to where you have minimal drawdown. The trades go directly in your favor, and then you start to profit, right? You know, the thing I want you guys to understand is in the market, there are measured moves, right? This is something Christopher Terry taught me years back. Measured moves. He taught me this. He said there's a few patterns in the charts. He said the market in the uptrend will always go from a higher low to a higher high to a higher low to a higher high to a higher low. The second thing he told me is the market will always go from an impulse to a pullback. So it's always going from impulse to pullback, impulse to pullback, impulse to pullback, right? So if you guys stay ready, you don't have to get ready. What I want you guys to understand, the biggest market patterns are not double tops and double bottoms and mess with your head, right? You got to understand that there's other people on the other side of the charts that are there to manipulate you and really mess you up on the when it comes down to your trading, right? So what I want you guys to understand is it's gonna go impulse pullback, right? Now the next thing I want you guys to understand is Chris Terry told me this. He said, Justin, he said, bro, check this out. He said if this move here was about 200 pips, he said 9 times out of 10 the next impulsive wave will also be about 200 pips. He said 9 times out of 10 the next one will also be about 200 pips. He said if the pullback is about 50, the next pullback is roughly also going to be about 50. So now what you can start doing is you can actually start predicting what's going to happen when it comes down to the market and start mapping out trades, right? And I'll give you guys great examples of some things that we've mapped out already. Now, what I want you guys to understand is you can kind of take the rough average of the previous pullback to kind of predict where the market should pull back to. And then from there, once it gets in that area, you can kind of predict based off the last swing how high the market should go to, right? Now, what I want you guys to understand is we only take buying positions in an uptrend. Only take buying positions in, whoops, I think I spelled that wrong. Positions in an uptrend, right? In an uptrend. So what I want you guys to understand is you're only looking to buy off of these higher low points, right? You never want to sell just because you see the market's at a high point. Because what happens? You know, you say, oh, the market's at a high, I'm going to sell it, and then it just keeps going and going and going. And then, you know, you start praying to God, you start pulling your hair out, you're like, yo, just let me come back to break even, let me come back to minus 100, I'll close out the trade, blah, blah, blah. You know, we've all been there. So, you know, it's better to be patient and sit on your hands and wait, right? You know, most traders, they don't see the success that they desire because they simply don't have any patience, right? Yeah, guys, we already talked about steady. If you're hopping on late, we're already have broken down steady. I'll break it down again. I'm going to break down some of the setups that we caught off steady, and then we're going to try to find some new ones as well. So pretty much, guys, just a rough understanding of the trend. That's all it really takes to become a good swing trader, right? Just understanding where you're at. So now I'm going to explain what we're seeing in the market right now and what you guys should be focusing on when it comes down to the USDCHF, right? Now, what I want you guys to understand is we had a shift of direction in the trend, right? Market was going down. Let's delete everything. We had a strong downtrending market for a good amount of time, right? When it comes down to the trend, in a downtrend, the last lower highs are the key points in the trend. Once you see the market come break above the previous lower highs in the trend, what that does is that tells you that there's a shift of momentum coming, right? So if we look at all these lower highs, the market made a lower high, lower low, lower high, lower low, lower high, lower low, and then it shifted up. So at this point, we would have started looking for buying opportunities, right? But the key thing about this is very simple. What we see is we see a shift of momentum back to the upside. What I like to do on my personal charts is I'm going to come in and I'm going to actually just draw out these circles, right? And why I do this is very simple. If you stay ready, you don't have to get ready. What I'm going to do is I'm going to look for the major points in price. And these are all the key higher highs and higher lows, right? And this is what we do on steady, right? So I'm teaching you guys how we find our setups on steady. I'll show you guys how we found this GBPUSD. I'm going to show you guys how we found this USDCHF. And then I'm going to show you guys pretty much, yeah, it shows the mic is working, guys. Not exactly sure what might be happening. And I'm going to show you guys how we found the rest of the setups. So give me a second. Perfect. Now, what we're doing is we're just looking for the key areas of price, the key swings, right? And I'm going to teach you a few different things. Once I come up to the highest high in the market, what I'm going to do is I'm going to come back to the previous high or low. I'm going to change the color to a different color, and then I'm going to highlight this price with a horizontal ray. And the reason why is that if price comes below this previous high or low, I know that it's a shift of momentum. If we look at structure in the sense of a line chart real quick, let's do that just so you guys can understand this better. What I want you guys to really get from this is simple. In an uptrend, the market's going to be making higher highs and higher lows. Eventually, what's going to happen is the market gets to the higher high, it's going to make a pull back like it's supposed to, but when it pushes back up, it fails to make a higher high. It actually makes a higher low, right? So what we do is we take the previous higher low, we draw out that horizontal ray, and what we're looking for is we're looking for price to come down to this line. It can touch this line and go all the way back up, and it's still an uptrend. But the moment price goes below this line, it is now a downtrending market. It's a shift of momentum. It's going to pull back, and then it's going to start trending down, right? So when it comes down to our setups, we're looking for a few different things. We're looking at shift of momentums on a higher time frame. We're looking for momentum type trades. We're looking for institutional setups, right? And sorry guys, we're looking for institutional type setups as well. So what I want you guys to understand is there's trends inside of trends, and you got to be able to spot these trends. You got to be able to spot when the momentum is shifting, right? Yeah, guys, if your mic's not, if your volume isn't working, I'm sorry. I'll talk to the programmers after. I mean, it shows my mic's working, so we'll see what's good. I'll speak as loud as I can. So now what I want you guys to understand is this. We're gonna come back to the charts, but I want you guys to have visual representations. If you guys are enjoying these little drawings I'm doing, go ahead and drop in the chat that they're making sense. If these are helping you guys, let me know. Obviously, this is my first ever go live TV live stream, whatever you want to call it. So I just want to make sure you guys can understand everything. We'll come back to this the drawings here in a little bit. But what I'm gonna do is I'm gonna watch price, right? Look at this, guys. Watch what price did. Let's look at this example. Hold on. Look at my little drawing right here. Right? Look at this. All right, so let's look at what price did. Price pulled back down. It made a higher low. This low is higher than the previous low, right? After the higher high. and then it pulled back, but this pullback was a lower high, right? What should have happened is the market should have made a big move above this. That's what most people were looking for. But because it did this, this is my first indication that the direction of the trend is about to shift, right? So again, because this happened here, right here, that's my first indication the trend's gonna shift. We're gonna watch what happens. It breaks below, it closes down here. That's my confirmation. Now what am I gonna do at this point? I'm gonna pull up my Fibonacci tool. You know, I could spend hours and hours and even sessions teaching you guys about Fibonacci, you know, advanced Fibonacci, things like that. But for this session, all we're going to do is we're going to show you the fib move, right? So we're going to take the fib from the high down to the new lower low, right? We're going to delete this. We're going to delete that. Let's say our shift is now, say purple. All right, cool. So here's the new lower low. We know that in our trading, we know that the 61, 71, 78, 6 area is like a golden area, right? We took the short up here, but there's multiple different reasons why we took that short, right? So again, we shorted right here. The red arrow is where the algorithm puts in the setups. There's the entry, the TP, the stop, TP 1, 2, and 3, right? Remember, guys, steady is swing trading, right? But for those of you who want to use steady and don't want to actually hold the trades out long term, there's a TP1 just so you can get some bread and get out, right? Our setups are always going to be sniper entry setups. And the reason why is because we factor in you know, the price relationship between time and price, and we factor in the correlation between structure and institutional trading as well, right? And we'll get more into that as the sessions get more and more advanced. It all makes sense. It'll all make sense. I love you. Love you guys. Cool. The drawings help. Makes sense. For those having audio issues, use Chrome. Yeah, I'm using Chrome right now. Keeping it very clear and very simple. Appreciate you guys. Hope you guys are enjoying this. I'm having fun doing this for you guys. Now, before we continue on to where we're at, I want to explain to you guys measured moves, because I talked about it, but I didn't really get to talk about it, right? Check this out. Let's say I take the average swing of this move, right? If I copy and paste it 9 times out of 10, just like Christopher Terry taught me, he told me that the previous swing is going to be about the same size as the next swing, right? Let's just do the full swing. Check this out. If I take the swing high, the swing low to the swing high, and I copy and paste that move, if I take it to this one, see how this is the almost exact same size? From the wick to the top, it's dang near the same size, right? Let's say I take the next swing from here to the top, it's almost a similar size, right? If it's not, you can always take the size off of this, and if we copy and paste it, more than likely, this is going to be equivalent, right? Hopefully that makes sense. This is measured moves. Now what I want you guys to understand as well is the pullbacks work in a similar fashion, right? If I pull back, this is about the same size, right? So now you can kind of start predicting where price is going to be. And also when you correlate that with the fib, I'm going to teach you guys how we enter with the fib as well, right? The 50 is not something I usually have on the fib. I'm just going to remove it for now because I actually don't use a 50 whatsoever, right? I usually don't use an 88.6 either, and those are the fib settings that I like to use, right? Negative 27, negative 61.80, 61, and 71. If I teach you guys about this, the 61 is usually your entry 1, the 71 is entry 2, and the 78.6, you put your stop 10 to 15 pips below that on the basic fib strategy that we use, right? And when you're taking profit, the way it works is very simple. If I'm buying here, my stop loss goes 10 to 15 pips below the 78.6, so it's 26 pips. My take profit is always that negative 27. So that's a 1 to 8 risk reward. I'm risking 26 pips to make 214. Now you guys will start kind of understanding why our setups are so not only precise, but why we're able to catch these big moves, right? And sometimes we might miss it. It misses by barely anything, right? But let's kind of keep going on to where price is currently at, what we should expect right now. All right. So we see price has made this impulse down. We've created a new lower low, right? We're going to copy and paste this, and this is going to kind of project where we want price to go to. I just finished telling you guys the negative 27 is usually our first target. If we go back to steady, if we look at TP3, it's at 0.9800, 8,000. If we look at TP, this is 0.9, 8,000. You guys see how that correlation between structure and length makes sense? You see how this is making more sense. I don't look at the charts like double tops and double bottoms and wicks and stuff like that. I'm looking at the chart like this. I'm looking at the chart like this. If you start looking at it like this, it's gonna start making a lot more sense than looking at all of this, because this doesn't make any sense. You know, first time on the charts, you don't know what you're doing. This is confusing. Looking at this stuff is tough. But if you analyze the market and look at it as, you know, waves or, you know, zigzags, whatever's easiest for you, just try to dumb whatever it is down, make it easy for you, and that's what we're gonna see. Now I'm gonna teach you how to correlate more so institutionalized trading with what we're already doing, right? So what I want you guys to understand is usually what we'll do is we'll look at the last up move before the down push, right? So in this instance, we went off of this candle right here. This was the last institutional upside candle, the open of this candle. This was a candle that pushed up above these highs, right? You know, shout out to the trade house, you know, the DFW trade house, some of the best educators in the game. You know, they taught us some crazy things, right? What you guys have to understand is, let's do this. We're gonna come back to this chart. We're gonna look at this. Let me change this to a different USDCHF. USDCHF, all exchanges. So what the DFW trade house did was they brought education in the sense of institutionalized trading, right? And what I'm gonna do is I'm gonna kind of break some of that down to you guys as well. Why did your name change from Mike to Starboi? My name's Justin Saini. It's never been Mike. It's always been Justin Saini. Starboi's been there since swipe trades 2+ years ago. Perfect. If you guys are enjoying this call, super excited, and they're always going to be like this. So check this out, guys. What most people are seeing is this. We're focusing. This is USDCHF once again. I just wanted to get off the drawing we were already doing, just so I could teach you guys something interesting. If we look at this area and price right here, most people would have looked at this area and they would have said, hey, this is a double top. When it gets up here, we're gonna sell here and then it should drop, right? See, if I just mark it up, it kind of looks like an M, right? It looks like an M. Most people are trying to take profit down here. What you guys have to understand is that there's other people on the other side of the charts, right? There's people that are there and their sole job is to make you see something and emotionally make you take a position, right? You guys have to understand is there's people on the other side of the charts that have unlimited equity, right? They have enough money to push the market wherever they want to go in a legal standpoint, right? So what you have to realize is that most people, they're taught to, when they see a double top, hey, you're going to sell the right side of it, and then you're going to place a stop loss above the highs, right? Let's say here's your stop loss above the high. So boom, most people would have put their stop loss, the red line there. What happens? Price goes down, you're in profit, and then out of nowhere, it just pumps it up and it gets you out of this trade. It knocks you out, right? The reason why this happened, the reason that this candle right here happened, this big bullish candle, was because the people that have unlimited equity in the market, they came through and they saw that all the basic traders are selling these double tops, right? What I want you guys to understand is that these people, they can see what everybody's doing, right? So what they're going to do is they're going to come in, they're going to pump the market with hundreds of millions of dollars. they're going to hit your stop loss, take your money, and then they're going to continue the market in the right direction. So you could have been right, but they're going to play you because you're just not educated, right? You got to understand that Forex education is, to a certain extent, a scam, right? And just follow me on this, guys. Check this out. Basic Forex education is a scam. And the reason why is because the basics Forex education is out there on the internet, but who put it out there? It's the banks and the brokers and the market makers, right? The people that want you to lose your money are the people that are educating you on these topics on how to lose your money, right? I'm not saying every double top or every double bottom is not going to work, or every head and shoulders pattern is not going to work. They work, but I'm saying that these people exist to help you guys lose your money, right? So what I want you guys to understand is the majority of the volume on this candle was at the open or the body of this this big bullish candle, right? So if we go to the 4 hour, you can kind of see it a little bit better. You put the I like the 4 hour the most, but the open of this candle is where they pumped in all these buy orders, right? To then get up here to get a premium price to sell down, right? And then they pull the market back because you know, they leave their buy orders open. You know, I can get into that. DFW Trade House breaks it down more, but this is the basic understanding. They're going to buy here. They're going to make the market go up, and they're going to sell here. And the reason why is they have hundreds of millions of dollars on the buy, and they have hundreds and hundreds of more millions on the sell. If they weren't hedging their positions, the market would be going crazy, right? So the reason why they come right back up to that same point is because they want to break even on their buys, and you know, so on and so forth. They want to mitigate, blah blah blah, right? Buy to sell, FU candle, exactly. So let's continue. Where can we add steady from? Steady is actually free for the next 30 plus days, mid-October. I'm gonna come back to steady. We still got like 30 minutes in the charts, guys, so we got a lot of stuff that we can kind of go over. So just hang tight. We're Gucci. Give me 1 second. I just need to drink some water. All right, dope. So now you understand why we looked at this point. So now what we're doing is we're correlating institutional trading with our existing top-down analysis, right? I told you guys we're entering at the 71% and the 61. See, if we entered at the 61, we would have went into a little bit of drawdown. If we entered at the 71, we still would have went into a little bit of drawdown. But entering off of this institutional candle is cool because now we have a very nice sniper-like entry with little to no drawdown, right? So, you know, this is a trade where, you know, we entered here. You could have had a stop loss of, you know, let's say 15 pips if you wanted, and then a take profit of 140 plus, right? Think about this. These are trades that you can do very good risk management and make a lot of money, right? You guys got to just factor it in. We could take the same trade at the same place at the same time, and maybe you just you know, maybe the person who got you into trading, they said, hey, always trade a 35 to 50 pip stop loss, right? No matter the setup. We could take the same trade at the same time, but because your stop loss is so much more wide, your profits are going to be so much less, right? Think about this. Let's say I'm risking, at my 15 pip stop loss, let's say I'm risking $100, right? Let's say at this stop loss over here, I'm also risking $100, right? The difference on the two is very simple. Check this out. If I'm risking $100 on a 15 pip stop, I'm using let's say I'm using a 0.65 lot size, right? If I'm risking $100 with 50 pips, I'm using a 0.2 lot size, right? So now factor this. It's the same take profit, 140 pips, But on this trade, I'm only gonna make 280. But on this one over here, I'm gonna make well over $910, right? I'm dang near gonna make 3 to 4 times as much money just because I understand what the candlesticks are telling me, just because I understand what price is doing, right? We can risk the same amount of money, but I'm gonna make 3 to 4.5 times more money than you because I understand how to use my stop loss properly, right? Hopefully that makes sense, guys. Yo, the Telegram link is right here. If you guys click the link, I'm gonna drop it in the chat. There's the Telegram link for Steady. So the Telegram link for Steady is right here. It's just gonna be alerts of when the trades are coming out, so you guys can always be alerted, right? But hopefully this makes sense, right? So now what we can see is USDCHF. It's already floating in profit. We should see it swing down, and that's that, right? Now on Steady, what we did was we also called out a position. We also called out a position on GBPUSD. Now, this one missed my entry, but I'm still going to teach you guys on how I'm able to see the market days and even weeks in advance, right? So let's get into it. So now we're going to be looking at GBPUSD. We're going to come in, we're going to delete everything off the charts, and now we're going to talk about understanding structure and realizing really what's happening on the charts. So check this out, guys. What I want you guys to understand is the market might be in a uptrend, and then the market might pull back, and it might. This is the basic pattern of the market right here. This is a A, B, C, D, whatever you want to call it. This is the basic pattern of the market. You as a trader, what you have to realize is that you got to trade from the top down, the monthly, the weekly, the daily, the 12-hour, the 8-hour, the 2-hour, the 1 hour. Don't go, and you can go maybe to like the 30, 50. I'll break that down later on. But what I want you guys to understand is that, yo, when you're trading, even though the market might look like this on the higher time frame, the daily, on the 4-hour and the 1 hour, you're seeing price do this, right? You got to understand that during this time, you see price doing this, right? So even though that you see the market is in an uptrend overall, you know, on the 4-hour, you might look at it and it looks like a downtrend, right? And then, you know, price will work its way into areas where it'll do this, right? So the point when it comes down to these sessions is I want you guys to start seeing the market like this. Overall, the market is the black line, and that might be the daily time frame. Maybe when you scope into the 1 and the 4-hour, there's a trend within the trend. You got to always know where you're at in price, because what's going to happen is eventually you're going to be buying this market all the way up, right? Let's say this went to here, right? You're going to be buying this market. You're going to be buying all these higher lows up. And then what happens is it's going to be a shift of momentum on the lower time frame. And then you can start selling this market all the way down to your optimal entry point. And then what's going to happen is you're going to start buying it long and then adding positions every time it pulls back on the lower time frame, right? Does this make sense, guys? Let me know if that makes sense. Can you explain the market structure again? Came late on the stream. How do you get the green and red take profit stop loss target? That's just a risk reward tool, guys. You know, it's free in TradingView. This video will be recorded when it's done, so you can always come back and watch it. This is the first session. I'm gonna leave it up because we're obviously going over a lot of good value, right? So if this makes sense, go ahead and just drop that in the chat, guys, just so I know that the way I'm teaching is easy to follow, because obviously as we continue to grow and continue to teach, you know, I've never really taught before in my life on these sessions. The only time I've ever taught is at big events I attend, whether it was an event here in the U.S., whether it was an event in Europe, the U.K., Latin America, Trinidad, wherever it's been all across the world. I've only ever taught in those environments. So now coming into this, it's a whole different playing field. Will Paul, what's up, baby? Hope the family's good, bro. Hope the family's good. Good to see you on here, my boy. Perfect. So let's continue on, guys. Let's continue on. So GBPUSD, from a higher time frame perspective, what we can see is we had a nice monthly doji candle, and now it's starting to kind of reverse. This is top-down analysis, so from the top down, it's pushing up. Daily, we had a nice little double bottom, you could say. The reason why this happened is because most people were trying to buy this right here. Because once again, you're taught, hey, double bottom, buy it here. Where's your stop loss going to be? It's going to be down here. They took your stops out, and then they made the move, right? It happens all the time. You guys will see this all the daggum time, right? So 12-hour, 8-hour, 4-hour. Let's just look at price in the sense of the structure, right? Just for the sake of time, I could do it. Let's say, the colors I choose, they really don't matter. Whatever makes you happy, whatever, makes your heart smile, whatever you want to say, it doesn't matter. We're just going to come through and we're going to highlight all the key points, all the lower lows and the lower highs. These are kind of equal. Lower low, lower high, lower low, lower high, lower highs, lower lows, lower low, lower high, lower low, and we have some minor shifts of momentum, and really the big shift of momentum was right here. So when price broke above that, that kind of tells me that it's now shifting above momentum, right? When price got above this and even this, that told me that, hey, this is now an uptrending market, right? But then you want to scale into the lower time frames. Think about your time frames as Google Maps, right? Think about this. We can see this is going up, right? Or let's look at these last 3 daily candles. We can see this is going down, right? Think about this. I live in the state of Texas. Think about these candles as the state of Texas. If you guys don't know Texas, whatever. This is the overall state. Let's say I zoom into the 4-hour. Now I can see where I live, Dallas, a little bit better. It's the same thing going down, but now I can see everything. Think about where you live, whether it's Trinidad, London, Europe, wherever you guys live. Just think about that. It's the same thing, now it's going down. Let's go down the 1-hour. Now I can see all the little sub-cities and the streets and all the extra stuff. Same thing, just a different way of looking at it, right? So, all right, so we're on the 4-hour. We see that the momentum has shifted to the upside. Now what does price do? It starts pulling back, right? Let's go to the 1-hour. The 1-hour is going to have its own structure, right? So here was the low. There's the high. This was the low. Here was the high, the low, the high, the low, the high, the low, and then the last higher high. What did I tell you guys to do? Once we get to the last lower high, or the last higher low of an uptrend, we're going to label it off. And once price gets below this point, it's now shifted directions, right? Now, if we go back to steady, let's go to the 1-hour on steady. If we go to steady, what we saw was, once again, right there, I circled it right here. I put the line. Price broke down below. Most people were looking for this. It's an uptrend. They wanted to continue to go up. Most people tried to buy here, and it was going up. I saw it pull back below this, so what am I expecting? A pullback into our fib range and then a move down, right? So check this out. Sometimes things don't play out the way you want, no matter what it is in life, whether it's trading, whether it's your relationship, blah, 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 right? Let's see. Loving this first live. Yo, I appreciate all the love, guys. I'm just seeing if anybody has any questions. This is perfect. Dope, dope, dope. You're about to change the game for real, for real. It's already changed, Bodie. So let's get back into this. So once we see that price has shifted, I'm gonna delete some of these extra lines because I don't want them. All right, dope. Once we see that price has shifted on the lower time frame to the downside, what we can kind of expect is the price to pull back. So let's say we take the fib from the high to the low, right? No matter where you pulled it from, whether you're the type of person that pulls it from the wick to the wick or from this wick or whatever, you know, my optimal entry is always a 61.71 area, right? Price didn't necessarily make it up there. If it made it up there, this would have been a perfect setup. Now, check this out. Once again, we're going to go to the 4 hour, and what are we going to see? We see the last candle up before the move down, right? There's always volume stuck in this area, right? And then if we measure out 50% of this candle, 50, boom, 50, we'll put 1 right there. We can delete this fib. What we wanted, what we realized is that, you know, there's some volume right here. You know, this just kind of randomly shot up. You got to think, these are kind of equal highs. This area is kind of equal in the sense of highs. Price shot up, and then it pushed down. What we wanted was price to pull back from here into our 61.71 area, maybe this black line, perfect entry, and then we wanted another equivalent size move to the previous swing, right? Oh shoot, almost said a bad word. My bad, guys. So here's our measured move. This would have been the play, right? What I want you guys to understand, the negative 27 is TP. It could be your first target on swings. The negative 61 could be your second target. You know, we missed it, but that doesn't matter because the analysis and the bias is still correct, right? Just because you miss an entry doesn't mean that you're a bad trader. Now, what I want you guys to understand is on steady, I said this. I said we here at steady focus on top-down analysis, which means breaking things down from the highest time frame down to lowest. So currently on the lower time frame, we have a shift of momentum to the downside, which is the pullback off the higher time frame. We will catch a swing down for 330 plus pips to a safe price where we can catch a huge long in the fib retracement, right? So what I said was this. I said we're going to catch this move down into this area, and then we're going to catch the move up. Now I'm going to teach you guys why we were going to do that. We got about 10 minutes left on this this session. So if I take my fib from the swing low to the swing high, what I want you guys to understand is the momentum, remember, price shifted above all these highs, right? This is an uptrending market now, right? So what we want to see, is obviously we want price to come down into this region, right? This is where we like to get in. But what we want is a better understanding of what's going on, right? If we look at this rough area, let's say from here, let's just say from like here to there. 1, 2, 3. Let's just say in this area. What we want to see is that I like this little candle right here. This is just a random fun candle. What we want to see is price pull back into this rough general area, this range. And the reason why is that if it pulls back into this area, now this gives us an optimal, gives us like the best possible place to enter, right? Let's look at our arrows. Look at the swing. Measure out the move. If I measure this move, right, I want my best possible optimal entry to be either at the 61, at the 71, or at these black lines, right? What we can see is potentially price swing down into this and then us going longer, right? Remember this drawing. Remember this drawing, guys. Remember this drawing. Check this out. I'm giving you guys mad nuggets. I'm giving you guys, 3.5, 4 years of experience in literally an hour. This is literally everything Chris Terry taught me, right? Remember this, the bigger picture. During the bigger picture, check this out, guys. Check this out. During the bigger picture, there's trends, right? There's a bunch of, there's the uptrend, there's the downtrend, the pullbacks, right? Look at the bigger picture. See this? It moves up, moves down, and then moves back up, right? So now we're seeing the market with such clarity that we can kind of see where the swings are headed, right? So when it comes down to steady, what I want you guys to understand is these are trades that you can rely on. These are trades that you can set and forget and go focus on building your teams, right? Go focus on hitting those ranks so you have more money to put into your trading, right? So, this is a trade where we might risk, 50, 60 pips to make 592, right? This is a trade you could risk $64 to make $592. This is a trade you could risk maybe 600 to make 6,000, right? Depending on, if you're, where you are in the market. This is a trade you could risk $6 to make $60, right? You got to think about that. Think about the newest person on your team having a $100 account, risking $6 to make $60, right? Yeah, it might take them a week, but is that not worth it? It is. Big facts. Please do future sessions on institutional trading, those FU candles. Oh yeah, for sure, for sure. Can you repeat what you said about the lower time frames? I don't know what I said about the lower time frames. I've been talking a lot. When you draw a horizontal ray, would you wick spiking through the ray count that as a momentum shift, or would the body close? Anytime that it breaks below, I count that as a shift of momentum. Is a trade house course the best place to start as a beginner? I'm not sure. Maybe. I think so. Yeah, I don't know. Myself and John Dolly will eventually drop a course as well. What confirmations do you look at to enter off the fib? I just put sell limits and buy limits. So I'm just buy limit here, buy limit there, buy limit there, and I'm riding the waves, right? We're surfing. So once again, guys, I'm going to break down steady. If you go into IM Center, you go into products, steady is going to be right here. When you click on it, it's free for the next, free for like until mid-October, and you guys got to subscribe. If you click on steady, it's going to take you to the product, and if you guys click up here, it's going to have the Telegram link. If you guys aren't in Telegram, I'm going to copy this one more time. Copy. I'm dropping this in the live session. Paste. That's the Telegram link. On which low the swing fib to. No. Hey, bro. One thing I always got confused on which low to swing the fib to. Just take it to the lowest point to the highest point. If you're in a trend, you take it from the higher low to the higher high to the new higher low to the new higher high, right? So the way you do your fib properly is like this. Depending on where you're at in the trend, your fib will go from here to here, right? Your next fib will go from here to here. Your next fib will go from here to here. And what the fib is pretty much doing is it's telling you where potentially price will pull back to before it goes higher. So that's the fib. Let's go back. So once you're in steady, guys, when we're sending out trades, when we're sending out alerts, you'll get a notification. You'll see an up arrow, a blue arrow, or a red arrow telling you whether we're buying or selling. You'll have an entry, a stop, TP 1, 2, and 3, right? You'll also have notes on the trades if there are any available notes, right? Right now, active pending. The software is still new, but we're going to figure it out. We have USD CAD active pending, about 55 pips in profit. These are I don't know why these are here. These were test trades. GBPUSD missed. Gold missed. Euro odds already done and dusted. We had about, I don't know how many pips that was. we had about 118 plus pips. TP1 was about 75 pips. Pulled back. We're out of that one. USDCHF still active. We're up about 35 to 45 pips. We still got this is a 140 pip trade, 145 pip trade, right? So once again, guys, steady is very simple. The newest trade will always be at the top. If there's any notes for the trade, you'll be able to read what we're understand. You'll be able to read what's going on. We're gonna drop a lot of value. And again, guys, these are gonna be trades that really go the distance, right? Even though these trades missed entry, what I want you guys to understand is the bias is the most important thing. If you're thinking about selling gold and you see that we're also thinking about selling gold, just because the entry missed doesn't mean it's not a good place for you to go ahead and enter the market and find it, the setup. You feel me? The goal is going to be to have the premium news feed when it comes down to I Am Mastery Academy through Steady. And with that being said, guys, we're pretty much wrapping up this session. I want to say I appreciate y'all. I'm grateful for y'all. I had a lot of fun doing this. I'm looking forward to doing this as well. And on top of all that, how much is it going to cost? It'll be like $20, same as everything else. And I promise you, one setup with Steady will pay for a year's worth of subscription. There are times where structure is difficult to read. Please explain how to understand structure. Saini, Basari, just rewatch this session. It'll be up here in the next few moments. With that being said, guys, once again, we're pretty much done with this session. Drop a like if you guys enjoyed this session. Go ahead and share this session with your teams. We're going on every I'm going on every Sunday and Wednesday. John Dollery is going every Tuesday and Thursday. So that being said, once again, guys, appreciate y'all. Love y'all. Y'all stay blessed. I'll see you guys at the top. And yeah, I hope you guys